You check your bank account before you check the price tag. That's not a habit. 69% of Americans say they're worried they couldn't cover their bills next month if their income stopped today. Here is what you are going to learn at the end of this video. 6 exact stages of financial stress, from having nothing saved to having a full year covered, and what each one actually does to you. Not to your bank account, to your sleep, your relationships, the job offers you accept, the way you talk to yourself at 2 a.m., and at the end, the real math on what each stage costs you if you stay in it longer than you have to. Think of money like oxygen in a room. Nobody notices it when there's plenty. The second it starts running low, it's the only thing your brain can think about, and everything else in the room disappears. Stage 1 is 0. Nothing saved, nothing behind you. Almost 1 in 4 people are here right now, and more than half the country couldn't handle a $1,000 surprise bill without going into debt for it. At this stage, your brain isn't broken, it's just full. Full of the same 3 questions on a loop. Can I cover rent? Can I cover the card? What happens if the car breaks down? Economists Sendhil Mullainathan and Eldar Shafir ran an experiment where they simply asked people to imagine a $1,500 car repair. For wealthier participants, it barely registered. For people already close to the edge, just imagining that expense dropped their problem-solving ability by the equivalent of an entire missed night of sleep, roughly 13 IQ points, from a hypothetical that hadn't even happened yet. That's what 0 does to a brain that isn't even in crisis. It's bracing for one. And there's a second cost at this stage that never makes it into anyone's budget spreadsheet. Being broke is expensive. A $3 coffee can trigger a $35 overdraft fee. Banks collect billions a year in overdraft charges, and the customers who pay them are overwhelmingly the ones with the lowest balances, not the highest. No cash reserve to fall back on means no bulk buying, no annual discount on insurance, no getting ahead of a bill before the late fee hits. It's a tax you pay for not having a cushion on top of everything else. There's no room left for anything else, which is exactly why people at 0 end up taking the worst version of every deal available to them. The payday loan at 400% APR. The credit card cash advance, not because they're bad at math, because desperation doesn't shop around. Take someone like Renata, 29, sharp at her job, constantly behind everywhere else. She's not making bad choices because she's careless. She's making them because her head never gets a break long enough to think past Friday. Stage 2 is $1,000 in the bank. Doesn't sound like much. It isn't much, but it's the exact number financial planners obsess over, and there's a reason it's not $500 or $2,000. It's the number that covers the most common single emergencies: a car repair, an ER copay, a broken appliance without needing a loan or a fee-triggering overdraft to get there. This is the stage where you stop the bleeding, not where you build wealth. Think of it as the difference between the transmission dying and it being a disaster versus it being a bad week. At this stage, you start sleeping through the night again on the weeks nothing goes wrong. If you've never had that, you don't know how much it was costing you. Stage 3 is 1 month of expenses saved. This is where something shifts that has nothing to do with the money itself. You can say no to a shift you don't want, to a landlord dragging his feet, to a client lowballing you. Below 1 month, saying no feels like a gamble. Above it, it's just a sentence. This shows up directly in salary negotiations, and it's not subtle. People with even a small buffer ask for more money and get more money, not because they're better talkers, but because they can actually survive hearing no. Someone with $0 behind them walks into a negotiation needing the yes. Someone with a month behind them walks in wanting it. Employers can tell the difference, even when nobody says a word about it out loud. Stage 4 is 3 months saved. This is the one that changes how you sleep, not just whether you sleep. And here's the part that never gets talked about, because it doesn't show up on a bank statement. Money is the single strongest predictor of divorce in the first years of marriage, ahead of communication, ahead of sex, ahead of in-laws, according to a study that tracked over 4,500 couples for the National Survey of Families and Households. Not how much you make, not how much debt you carry, how often you fight about it. And what causes couples to fight about it isn't the number in the account, it's the tunneling. 2 exhausted people, both running low on bandwidth, snapping at each other over a grocery receipt that was never really about the groceries. At 3 months, that fight starts happening less, because neither of you is white-knuckling it through the week anymore. Take someone like Marcus, 41, warehouse supervisor, hit 3 months for the first time at 38. He said it best. He didn't feel richer. He felt like he'd stopped holding his breath, and so did his marriage. Stage 5 is 6 months saved. This is the stage where getting laid off goes from being a crisis to being annoying with a deadline, and there's a specific economic reason why that matters more than people realize. Researchers who study unemployment call it the reservation wage, the lowest offer you're willing to say yes to. Labor economists at Princeton and the NBER found that people with more than $10,000 in savings hold their reservation wage steady. They wait for the right offer. People running low on savings revise it downward fast and start accepting whatever's on the table. Separate research out of Austria, tracking 19 million job separations, found the same pattern from the other direction. Workers close to running out of money take jobs at worse-paying firms and are more likely to quit those jobs within 2 years, starting the whole cycle over. Sit with what that actually means. It's not that broke people make worse career decisions, it's that broke people run out of the option to wait for a good one. At 6 months, you get that option back. You can look for the next job carefully instead of desperately, and the research says that alone changes which job you end up in. Stage 6 is a full year saved. Almost nobody actually gets here, and honestly, you don't need to. By 6 months, most of the weight is already gone, but at a year, something else shows up. You can walk away from a bad job with no backup plan lined up. You can turn down the fast, safe offer and wait for the better one. You can say, "Let me think about it," and actually mean it, instead of using it to stall before saying yes out of fear. At a year, money stops being the main character in your life and finally becomes what it was supposed to be the whole time: background noise. Now here's the math on what it actually costs to stay lower than you have to. Someone at zero who gets hit with $1,000 emergency a year and covers it with a credit card at 24% APR, paying it off slowly, ends up paying roughly $1,240 for that $1,000 problem. Do that 3 years running, and you've paid $720 in interest for the privilege of never having a cushion. That's $720, invested instead, at 8% average returns over 20 years, becomes close to $3,400. The emergency wasn't the expensive part. The lack of a buffer was. Awareness without a plan is just anxiety with extra steps. So here's the plan. If you're at zero, the only job is getting to $1,000. Doesn't matter how slow. $25 a week gets you there in under a year. If you're between $1,000 and 1 month, set up the transfer for the same day you get paid, before you see the number and talk yourself out of it. If you're already past 3 months, stop stressing about the emergency fund and start putting that energy into investing. Because past that point, sitting in more cash actually starts costing you in lost growth. Renata and Marcus started at the exact same number, 0. Renata's still there, not because she earns less, but because every dollar she saves gets pulled back out by the next small emergency before it ever becomes a cushion. Marcus set up $40 a week the moment his head cleared enough to think past Friday and never touched it again. Same paycheck, same city, completely different amount of room left in their heads to think. That gap was never about discipline. It was about how much space you have left to breathe. If this helped you get one step closer to financial freedom, hit that subscribe button. Let's build wealth together.